I'm going to start it now and turn it over to you.
Thank you. Good morning to everybody, and thanks very much for joining us for today's event. The Dialogue is very pleased to host this discussion on how we should interpret the increase in remittances to Latin America and the Caribbean in 2021, and also the wider context and what explains this tremendous shift, the jump, and also what are the consequences of this. This is remittances obviously is a critical issue in the hemisphere, and has very important implications for economic development and migration flows. In 2021, remittances to Latin America and the Caribbean jumped to more than $135 billion, which marked a 24% increase from the previous year. That this growth occurred in the midst of a pandemic provides further evidence of the countercyclical nature of remittance flows to the region. It also raises a number of interesting and important questions that we will address today. To what extent can the sharp jump in remittances last year be attributed to higher levels of migration? Are increased earnings of migrants a significant factor that can explain the increase? How did the remittance market perform in the context of this increase? Were there major shifts in how remittances were sent? Is that one of the factors? And how have remittances impacted economic growth? And looking ahead, what are the prospects for growth in remittances in 2022? Will this trend slow down, or should we expect it to accelerate? We're very delighted to have a first-rate panel of experts to share their perspectives and expertise and illuminate the complexities of this significant dimension in the region's economic development and migration patterns. I'm very pleased to briefly introduce the panelists in the order in which they will speak. First, we're very happy to have a very good friend, personal friend and friend of the Dialogue, Andrew Seeley, the president of the Migration Policy Institute, who will offer some thoughts on migration trends in 2021 and perhaps looking ahead to this year. Our second panelist is Liliana Arguilagos, who's the co-founder and executive vice president of Via Americas Corporation and president of Via Amistad. She will help us interpret how the remittance industry is responding to the changes in demand. Our third speaker is Maria Alejandra Garcia Madrigal, who's the director of strategy for diaspora outreach at Bancolombia, who will bring us a leading bank's perspective on trends in remittances. And our final speaker is Piero Cohn, who's the founder and CEO of Osmo, a financial tech company focused on payment solutions and financial inclusion, who will address the role of technology for digital financial services. Moderating what will surely be a very interesting and dynamic and timely discussion is Manuel Orozco, who's the director of the Migration, Remittances, and Development Program at the Dialogue, who's a real pioneer in the study of remittances and really helped establish the field of study of remittances. Manuel teaches Central American Studies at the U.S. Foreign Service Institute and is also a fellow at the Institute for the Study of International Migration at Georgetown University. The impressive bios of all of our speakers can be found on our website. At the end of our conversation, we hope to hear from our participants. We invite you all to submit questions using the Q&A function in Zoom or by emailing them to meetings@thedialogue.org. You can follow this event on Twitter at remittanceslac and the Dialogue. As always, we extend our gratitude to everyone joining this discussion this morning, and I want to give special thanks to Matthew Martin for his valuable support and assistance in organizing this activity. And with that introduction, let me turn it over now to Manuel. Manuel, you have the floor.
Good morning, everyone. I was trying to uncensor me It's very good to see you all and to have this discussion on the flow of remittances to Latin America and the Caribbean at an interesting time in Latin America due to the different trends, events that are taking place in our region. We have significant migration waves that took place in 2021, an increase of remittances, as Michael put it, that basically overshadowed the growth in other macroeconomic indicators such as exports or tourism or foreign investment, among many other things. And we also see, a range of different dynamics relating to the conditions in Latin America and the Caribbean, from political dynamics relating to populism to social protest in different countries, and all of this in the middle of a pandemic and sluggish process of vaccination and recovery. So, remittances are somewhat in the middle of all these dynamics. And so we wanted to share with you this annual report on remittances, trying to capture some of these dynamics, and how has this issue really, how can we interpret this issue? And so, with that, I wanted to turn to Andrew first with just a general question. That, we see migration growing in large numbers, and to some, this is the beginning of a wave of migration, as in the post-global recession, or is just an issue of los viajes postergados from 2020. Which one is it? We see increased in migration so far in this first quarter of 2022. So I wonder what your thoughts on these are. Second, we have Liliana. You've been involved in this money transfer industry for over 20 years. And as you can see, you see different economic crises taking place, how migrants have responded to it. And this time, we definitely see a strong countercyclical pattern taking place. Is it because unemployment did not grow in so many ways as people thought? Or is it because migrants are more, to use the euphemistic term, well, now turning to euphemism, resilient? Or is it because there is definitely an element of commitment to their families? How do you see the industry responding to this increased flow of remittances? And we heard a lot about also the digital realm, that digital transfers became to play an important role. Is it worth really to make this division or distinction between cash and digital when the global financial ecosystem is still both made up of the same, digital automation as well as physical contact when it comes to sending money? And Alejandra, good morning. Good to have you from Bogota. I wonder, when it comes to the issue of financial inclusion, this topic of remittances turns into a relevant element, because increases in disposable income resulting from remittances have an effect on increase in savings. And we have advocated for financial inclusion as a way to get people to formalize their savings. And we know that the more the money is deposited out directly into an account, the more likely the probability of people being able to increase their wealth, their assets through that process. And one of the things we have learned is that Colombia basically has been one of the countries where account deposits of remittances have increased significantly, for more than half of all transactions performed to Colombia. So, Colombia is emblematic of this reality, and it's worth learning more about how do we attribute this to be what makes Colombians so different, just like what made Filipinos a long time ago, about 15 years ago, to be so quick with sending text messages using those Nokia phones. And then, Piero, the talk about financial inclusion has brought into the discussion of fintech. And fintech and financial inclusion not always go hand in hand. The fintech industry, the financial services based and supported by technology, has become an important element of financial inclusion so far as it seems transaction costs may be lower, but also the ubiquitous opportunity that the technology offers through an online or a mobile app offers can basically give you more opportunities to manage your disposable income more efficiently and in turn generate more wealth. So, but at the same time, we see that there is an uneven trend. In some countries, fintech technology and fintech businesses are not having a strong penetration. What do we attribute that to, and to what extent the remittance recipient customer may be a good candidate to this? So, I'll leave you to this. We produced a report trying to capture some of these issues. You're welcome to use it as input, but your insight is most valuable. So with that, welcome, Andrew.
Thank you, Manuel, and great to be with you. And we always look forward to your annual report on remittances. We take a lot out of this. For those of us that deal with migration issues in the region, it's an important benchmark for many things we look at throughout the year. So great to be part of the conversation as you're putting this out. The simple answer to the question of, is this a trend, is probably yes, but. And so let me take it in sort of three parts here, which is, first to say that we're dealing with two different things going on at the same time. One is a more structural migration, primarily from Central America to the United States, sometimes to Mexico, sometimes to Costa Rica. There's a certain number of people, primarily Nicaraguans, who are going for economic reasons. People are going from countries where they have fewer opportunities to greater opportunities. It has been long-standing between Nicaragua and Costa Rica, certainly between Guatemala and Mexico. But, both the social networks and the level of development have gotten to the point where people can think of a longer journey to the United States. And so some of this migration was bound to happen in the way that Mexican migration to the United States did at another moment, right? And we should assume that, there is, and that tells us there's no magic bullet. You could do everything. You do everything absolutely right to invest in development and to, give people opportunities, and there will still be migration for a generation here, right? It's still very likely we're going to see this because of demographic pressures, because of simply the economic differences that exist, and the social networks that facilitate people going, and the real return on investment for people who take a risky journey, to the United States, or slightly less risky, but still uncertain always in the case from Nicaragua to Costa Rica. And there's some other migration, smaller migration flows. And the region of Haiti to Dominican Republic, for example, that would fit into that, some of the migration there. And, historically there was from Paraguay and Bolivia and other countries, but those have largely changed actually as those countries have come up. So that, within South America, it actually looks quite different. So that's one element. There's just sort of structural migration. On the other hand, there's a series of crises going on, and these overlap with each other. So, clear crises are going on in Venezuela, in Haiti, in Nicaragua, right, where there are political conflicts that derive in economic, severe economic stress and a breakdown of public services, right, and often a violent atmosphere as well at a very local level, in addition to politically related violence and persecution. So, country states that are incredibly fragile, that are leading to some mass outflows, right? Or at least potential mass outflows. And then you look at Central America, the rest of Central America, and you also see some of those same elements, not at the same level, certainly, but you do see some of the same elements that mix in terms of violence and uncertainty in people's lives. There are more crisis conditions that add on to the structural factors. So it's sometimes very hard to distinguish. This is one of the great debates going on. Are people leaving because it's an opportunity to get ahead? Are they leaving because of a direct threat to their lives? Is it both? And there's sort of a continuum there, right? People who have protection needs and those that it is primarily a way forward, and both of those things are happening at the same time. So all of this is to say we're dealing with structural issues, we're dealing with crises, and then the way people migrate, where they choose to go, whether they end up deciding to make a journey outside their country, they move somewhere else in their country, depends a lot on economics and policies, right? That ultimately also shapes people's journey, and those are the uncertain things. So let me turn to that, which is, economics certainly have changed. Much of Latin America is still coming out of the COVID recession. The US economy is heating up really quickly, and it's a tight labor market. So huge attraction for economic reasons for people to, move from everywhere in Latin America to the United States, right? And we've seen it not from everywhere, certainly, but we've seen it from, Central America, certainly, but also we're seeing Venezuelans and Colombians and Brazilians and Ecuadorians, groups that have the social networks. I mean, some they come and go, the numbers come and go depending a little bit on policies and economics, but quite a large number of people going. There is, at one point, most of the Venezuelan and Haitian and Nicaraguan migration was directed towards other countries in Latin America. And something we like to remind people is, as much as Americans obsess about the border, until recently, there was probably much more migration going on and much more forced migration going on within the region. People actually staying in countries near to where they come from than actually, or at least within Latin America and the Caribbean, then coming to the United States, right? That has shifted slightly. I mean, we've seen actually, because things are so slow to recover in countries like Colombia and Ecuador and Peru, the US becomes a much more attractive option, right? And so some of these flows are moving northward. And then we're also seeing policies make a difference. And what we've seen happening now is that the US immigration system is simply overwhelmed by the number of people arriving. There have been some decisions that probably have created a bit of an attraction done for humanitarian reasons and certainly justifiable, but at the same time with consequences that that essentially have allowed groups of people to come in. It's very hard for the U.S. to return people to Nicaragua, Venezuela, Haiti. The U.S. is very uncomfortable doing that. The current administration, at least, is very uncomfortable doing that without an asylum system in place. And so the tendency to allow people from certain countries to come in, but obviously that creates an incentive for others to say, wait a minute, maybe it's the moment I should be thinking about. If there's ever a moment to try to get to the United States, this is that moment. Uncomfortable trying to return families, particularly with young children, to Mexico under Title 42, and so often letting them come in. Understandable on one hand, on the other hand, probably creates incentives for people to come. And then what's happened is the US system gets overwhelmed, right? The US has a limited capacity to process people under any system, Title 42, Title 8, any system you want. I mean, the normal system is the Title 8, and then Title 42 is this exceptional system where the US government is able to return people to Mexico for health reasons, likely to end in the next few weeks at some point. We don't know when, but likely to end. But the U.S. system becomes overwhelmed. We saw this, and this is not just a Biden issue. This was a Trump issue in 2019. 2019, we saw the same thing happening. There were then a series of measures to try and stop it. I suspect the numbers would have shot up again very quickly, except that COVID hit, and COVID really did slow down mobility. This is a larger structural policy issue on the US side. Is there isn't really yet an asylum system that functions in real time. There isn't really capacity at the border to process people, triage between people who have protection needs and those who don't, to think about returns and reintegration in a systematic way. The Biden administration sort of look at all these things. I think they're very actively trying to figure out how to create a sensible system that makes sense, but it is a large challenge. And there's this broader challenge, and with this I'll end, Manuel. I mean, there's this broader challenge out there, which is, many countries in the region are dealing with large and sometimes unexpected migration flows at the same time. I mean, certainly, Colombia, Ecuador, Peru, Chile, Dominican Republic, many of the Caribbean islands. I mean, these were often unexpected. Panama and Costa Rica. I mean, Costa Rica, I need to see it. I mean, it really has carried a huge responsibility for people with protection needs from Nicaragua and Venezuela and other countries. And so one of the things that I think is happening now that I find really important is a conversation across the hemisphere. It's just starting, but a conversation. I think this will lead up to some of the Americas, and hopefully will continue after some of the Americas, because I don't think there'll be a full resolution of some of the Americas, but the beginning of a creation of a language about how to manage migration in a way that is, respectful of human rights, that recognizes protection needs, that supports countries that are really doing their part to receive and integrate people, that creates some order out of chaos and creates regular channels, legal pathways, circular migration, that begins to think of some of the things that we've all talked about for a long time, in a more systematic way. And not that the Western Hemisphere is suddenly going to turn into the European Union and have a set of rules that govern migration. In fact, the European Union struggles to do that. So, I mean, the Western Hemisphere isn't going to do that either. But the beginnings, we look at this as the beginnings of a conversation about principles about how to manage migration to create more predictability, more regularity, more respect for rights, more support for countries that really are in the eye of the storm of mass flows all of a sudden of people being forced out of their countries. And I think that's a positive step forward. We get just that far, it's a positive step forward. And actually, let me just add one final thing, which is to say, I think, where remittances comes into all of this, obviously, and others will talk more eloquently about this than me, is, remittances ultimately are the way that people themselves, that migrants themselves are actors in development process, and particularly with structural migration, that's incredibly critical, right? I mean, that is how, in a generation or two, countries move from being, countries where large numbers of people see their only opportunity as leaving to really having the opportunity for people to stay. And remittances, we can talk about policies all day, we can talk about development, but remittances are such a crucial part where migrants themselves drive the process. And also in crisis situations like Venezuela and Haiti and Nicaragua and in other parts of Central America, remittances are also part of how people get out of harm's way. Even in crisis, we're seeing this in Ukraine right now as well, right? I mean, the fact that people are able to get some money to be able to move from one community to another is essential as well. So remittances really are central, and there we need to think about migrants themselves being at the center of the solutions, both the long-term structural ones, but also the short-term crisis response that's out there in the hemisphere. So thanks.
Thank you, Andrew. I think just as remittances are complex, reflect the complexity of why they increase the migration itself.
That too
shows the complexities. I mean, this issue of structural migration, as well as uncertainty and crisis, the shifts from South to the US because of conditions in those countries, definitely augment, as well as policy, augment the flow of migration. Your point about the conversation is really important because the conversation on remittances hasn't yet happened. Even on the UN Sustainable Development Goals, the conversation is mostly about transaction cost, which is to a large extent an obsolete subject. But the migrants speaking for themselves in discussing financial inclusion, the Biden strategy on migration, for example, doesn't talk very much about remittances as an issue of leveraging. So this conversation is most needed. You're muted.
I mean, remittances are obviously very positive long-term, but short-term have all sorts of effects, including, creating reasons for people to move, right? I mean, enhancing reasons for people to move, but ultimately thinking about how you take remittances and looking at, at your report, we're talking 18 to 15, 25 or more % of the GDP. This is probably the largest single target for thinking about how you create a virtuous cycle for development. If you can think about ways of doing financial inclusion and then making sure that institutions are actually supporting development in countries as well. There's a huge, but others here know more about this than I do, but this is just such an enormous target of opportunity that keeps being missed in conversations.
Thank you, Andrew. Liliana, talking about remittances and the market and transaction costs and other things. What can you tell us?
Good morning, Manuel. Thank you for hosting the discussion. It's great to see you. Thanks to you and to the dialogue for your continued work in this area. I've followed your work for many, many years, and I'm very happy to be with you here today. So going back to your original question, you asked me a little bit about the countercyclical nature of remittances. And the inverse relationship is really with the conditions in the home country. When conditions in the remitter home country worsen, remitters send more. When you think about what a lot of the remittances are going going back to the home country for, they're going to help with very foundational needs, food, water, healthcare, all manner of thing. And it reminds me of the Maslow theory of needs, right? And the theory of motivation, right? You've got your physiological needs at the base of that pyramid. You've got your security needs, healthcare, financial security, and then you get to, social contact, self-actualization, and such above, and the more complex needs. You're talking about when conditions in the home country threaten these foundational needs, there's a high motivation on the part of the remitter to send, and that's what you see and what drives that inverse relationship. You also mentioned in your question some of the challenges that the remitters here in the United States faced in the last year: fluctuating employment, illness, and the remarkable resilience and adaptability of the remitting remitter or remitting customer. They changed jobs on the fly. They got better. They went back to work. They were in essential jobs and service jobs. And all throughout all those challenges, they continued sending money home. So as in crises past, the resilience of the remitter and of the industry generally, it was really on display over the last 2 years, really. So turning to the question of the methods of sending in Latin America, or excuse me, rather to the Latin American region, both the retail and the digital channels experienced robust growth in 2021. Retail continues to grow at a very, very healthy clip. Speaking for ourselves at the Americas, our volume in 2021 grew in excess of 50% year on year, and our transactions grew in excess of 35%. Our market share to Mexico now stands at 8%, and our market share to the 4 countries that represent, 3/4 of the sends to the region, Mexico, Guatemala, Honduras, and El Salvador, stands at 7.5%. So definitely we, the Americas are seeing very robust growth. And as you look at the retail industry more broadly, I recently read an interview with the CEO of one of our competitors, and he pointed out, rightly I might add, that in 2013, about 47 billion were sent in remittances to the region from the US. And in 2021, that number stood at 103 billion. Now, estimates are that number roughly breaks out into about 80 billion of retail and 23 billion in digital. So when you think about the growth from 47 to 80, you see that retail continues to grow very well. Of course, Manuel, as you and others have pointed out, you're seeing very nice growth in the digital channel, accelerated in 2020 because of the pandemic over prior growth patterns, and then decelerating towards the end of 2021. I think that bore out nicely in the, or was reflected, I should say, cleanly in your surveys over time of send methods from the remitters, where you saw that remittances from the retail channel actually jumped from 20 to 21, right? And you saw, from 2001, I think it was, that Zoom started, to 2016, when your initial survey, you had about 8% of your respondents talking about sending digitally, jumping by 2020 to a 16% share in the response, I think driven by the pandemic, and then leveling off. So what does that mean? You've got robust growth in retail. You've got robust growth in the digital channel. What does that portend for the future? In short, I think it means healthy competition and a better served customer with more options, right? Some analysts and policymakers that sit very, very far away from, the remitter that I see at a retail agency seem to think that retail is going to disappear and, discuss digital as if it were the sole and evolved offering. I think that misapprehends both the customer and the industry. And the way we see it, both channels bring very specific benefits to the customers in different ways and at different times. How? What are the benefits in the different channels? Well, if you look at retail, most of the money transfer operators are strategically located in the neighborhoods where remitters live and work. In many of these money transfer retailers, not the big box stores so much, but the mom and pop stores in the neighborhoods, the remitter is in a familiar environment that feels like their home country, and they're often there anyway to do other activities, right? Other benefits of retail, people are receiving personal face-to-face service in their own language. What does that mean? That means a human answering your question. That means a human guiding you, and importantly, doing data entry for you, right? Which can be a very important thing for some, right? It means in-person customer support in the case that, the customer made a mistake, gave you the wrong spelling of the recipient name or the wrong number of a bank account or whatever. They can go knock on the door and say, hey, what's the problem, right? There's no delay in the verification of funds availability, right? An important point as well. And you can do it whether you're banked, you can do it whether you're not banked in retail, right? Either one. You can pay with cash. Very important point, given that today most remitters are paid in cash or check. Not most like 51%, most like almost 90%, right? So tremendous benefits and customization to the retail channel. Now, look at digital, tremendous, fantastic benefits for the customer there. As I look at it, that one of the main things is the 24/7 availability of service, right? If I have an emergency at 1 a.m., it's hard for me to go to a retailer, right? And I need to send money, so I can configure that transaction from wherever I am at 1 a.m. That's a tremendous benefit to the customer, right? Convenience of being able to send everywhere, right? From anywhere. So, you're looking at substantial benefits, and there are others in both models. And to us, the evolved market offering is not digital. The evolved market offering is being able to serve the customer however and wherever they want to be served. And this is not the be all end all. More will come along, more ways to serve them, and better for the customer. Couple of more points on retail. Oh, sorry, that's my dog. More points on retail. There is a tremendous high level of self-reported satisfaction amongst remitters to the region concerning their use of the retail channel. Most report that they're happy with the reliability, the speed, and the price of service. And they have good reasons, as I just mentioned, to be satisfied with the high touch service that's provided by the best of the money transfer operators, right? And it always strikes me that when a Bitcoin user seeks an alternative to the banking system, they're brilliant, disruptive innovators. And yet when a migrant does it, they're a poor, exploited, or misguided soul, right? Why is that? It sounds paternalistic to me. It may just be that an agency isn't sexy enough for people making those assessments. So I don't know. Second, for policymakers and analysts, the reasons typically given why digital should be the exclusive direction of the market are threefold. One is cost, one is banking, and the third is convenience. With respect to convenience, I would say the customer will decide with their feet. They're going to decide, what's most convenient and gravitate towards the service that serves them best. Excuse me. With respect to the cost, I don't think it can be said today that the price differential between the two channels is as significant as some commentators would present it as. While digital channel does have lower fees, exchange rates are often less favorable than in the retail channel, rendering the all-in costs not that far apart and not sufficient to prompt a change in consumer behavior en masse and the foregoing of in-person benefits. I think it's important to note that the substantial financial losses of some of the digital players, indicate some subsidization of customer acquisition pricing. And you've got to think about or question the sustainability of that pricing on a long-term basis, and how long the markets and shareholders will stand for that kind of financial performance. Finally, with respect to banking, I've always heard this, oh, we want the market to go digital because then people will get banked. Well, research shows that many customers that are remitting at traditional money transfer operator agencies are banked, and they're going to the agencies anyway. In fact, at the Americas, many of our customers pay with debit cards at the agency. The assumption that people don't do digital primarily simply because they are unbanked is not supported. If you want to get more people banked, then let's work on, banks providing the types of services that this demographic really needs, such as short-term unsecured credit, right? So the last aspect of the industry as a whole, and the retail industry in particular, that I'd like to highlight today is the money transfer agency. Here you're talking about tens of thousands of small immigrant businesses, mom and pop stores supporting employment and economic activity in these immigrant communities. Now, some people may think that it's great to, replace support to local immigrant businesses with, payments to huge debit and credit card processing companies instead. But I would say that there's a value and an economic driver and an employment driver to those agents in those immigrant communities. So going back to the big question to wrap up here, 21 was a very strong year for the industry in both retail and digital. 22 is coming on strong. At the Americas in Q1, we grew 41% in volume and 31% in transactions. So that's, and that's coming over growth of 50% over in the prior year. So it proceeds apace. So our position with respect to competition is the more the better. The customer is well served. We're psyched to continue to serve the customer whenever and wherever they need it.
Thank you very much, Lily. Definitely, you made three important cases. One is that the countercyclical nature is mostly, the human face of migration. Economic needs prevails. Also, that the industry responded within a healthy competition, and perhaps we do need to problematize this artificial distinction of cash digital divides, especially when we use certain parameters. I think we have some input for a healthy conversation and debate on these topics because they are here to stay. They're not going into the discussion. Alejandra, welcome, and look forward to hear your impressions about Colombia.
Thank you, Manuel. Thank you for the invitation. I give you a warm greeting to you and all the colleagues that are participating in this event, and also the people that are seeing us and are connected to this relevant topic. Okay, for us, we think that account deposit is one of the major trends, not only right now, because we've been working on it even more than 10 years ago. But we think with the COVID-19 pandemic, this trend definitely was reinforced. We think that there are some attributes that contribute for this trend. And mostly in the beneficiary side that I will mention. The first one is regarding convenience. Liliana also talked a little bit about this, but definitely for the beneficiaries receiving remittances in their bank accounts, it's much easier. It's not the same when you have to go to a branch and without knowing if your money is already there, than just having a beep on your mobile phone telling you you have your money in your account and you can use it. So it's much easier for people. Second, you don't have schedules. Also, Liliana mentioned, you don't have to worry about the day. You don't have to worry about the hour. You don't have to worry about the transportation that you have to go to one of the branches or agents' locations. So it's much easier. And also, you have a different cash out methods. And you have ATMs, you have convenience stores nearby where you can withdraw your funds, and even you don't have to withdraw it. You have platform, you have all the mobile services and web services that can help you doing all your transactions directly without having to cash out your money. So those aspects, definitely it's a great experience for the beneficiaries. This is the first thing that we think it's important in the deposits, the convenience. The second thing, it's about security. We cannot deny that when you go to any branch or any agent store, you have some exposure. When you receive it in a bank account, you just receive your money silently and nobody can see it. So definitely you have less exposure. Our clients know that, and therefore we see a higher amount, average amount of the transactions that go to bank deposit rather than cash. For us, it's around 20% higher, the amount that goes to a bank deposit than cash. And the third aspect is regarding costs. And I will mention two sides of the cost. The first one is regarding the companies that are involved in the transaction, because all the processes are automatically done. So we've been seeing this cost reduction passing through the clients. So even we've been seeing a reduction around 9%, even without fees sending the money, or with a better exchange rate, trying to stimulate the bank deposits. So this is a benefit not only for the person that is sending the money, but also for the person that is receiving it. The second side of the cost is only with the beneficiary that are receiving the money, because you know that you have to spend some time for the transportation, for the queues in the branches claiming your money, and all of us know that time is money. But also, for example, in Colombia and in other countries, a beneficiary has to spend at least 2 bus tickets to go to claim their money. This is for people that are with not very good resources for their monthly expenses. 2 bus tickets are a lot. So when you receive it directly in a bank account, or you receive it in your mobile wallet, you don't have to have those expenses. You can just cash out your money in any ATM or any convenience store location nearby your home or your office. So that's a cost reduction also for the beneficiaries. Finally, we think that this is a trend that is not only now, but it will last, because we strongly think that once a client or a person use a bank deposit, they have a really good experience and they don't usually go again to the cash pickup. So also, you can see in Colombia, the second trend is the bancarization index in Colombia, which means an adults that have at least one financial product. And in Colombia, on February, that index is 89.4%. So it means that the financial institution, we are working really hard to make different strategies and products designed especially for the people, for everybody to can access to financial products and make them affordable to them to receive this kind of transaction as remittances that are very important, as you mentioned, Manuel, earlier, for the financial inclusion. So we continue doing strategies, making strategies for those people to interact with our products, to have a very good experience with it. And the remittances is just one transaction that can not only enable them to do their day-to-day basis transaction like the food, the transportation, but also we try to improve and accelerate the savings habit of the beneficiaries. So with all these aspects, we strongly think that this is a major trend that will continue. And for us, is the main strategy in Bancolombia. Right now, we have more than 86% of the transactions of remittances going directly to one of our accounts, traditional accounts or mobile wallets. And we can see with our clients, their experience, they don't change it for anything. So thank you very much for this invitation, and this is our thoughts.
Thank you very much. You mentioned convenience, security, cost, and financial access or inclusion as factors. In fact, for a migrant sender, reputation, convenience, value added, which is, can be social capital or financial inclusion, cost, but also value added, convenience, cost, and reputation are the three key factors that migrants value for sending money. It's just fascinating to me why Colombia has gone above and beyond on deposits into accounts, because it's just different. And I have the experience of, for example, of Dominican Republic, where you see an increase in digital transactions, but also an increase in home delivery in the middle of the pandemic. And it's just, it's fascinating how are these trends happening, even though the DR is one of the countries that has most aggressively in the past 3 years taken financial inclusion more seriously. So, it's just fascinating. But with that, I want to switch to Piero on the issue of, Bancolombia, banking institutions are competing in the fintech component, offering mobile banking solutions, but there is also the non-banking segment that offers fintech solutions too. What do we see? What can you tell us about these trends, and where do remittance recipients fit in?
Sure, thank you, Manuel. I don't think it's a coincidence that some countries are showing higher adoption of fintech, mainly Colombia, Brazil, Mexico, Argentina, Venezuela. Some of the countries that I've mentioned are either because they're the largest economies in the region and thus have the best people, and others because they are going through some instability, right? As is the case of Venezuela, or as the economic instability that Argentina is seeing, which has gotten their people to adopt crypto a lot faster than the rest of the region. In terms of banks competing with fintechs, I think it's very hard to generalize in the entire region of Latin America because regulation is so particular for each country, right? When people say, oh, well, what we need to do is bank the unbanked, I'm not really sure that that is the answer for financial inclusion. When you really try to understand why are people, and I'll speak mainly about Central America because it's what I know most, why are people unbanked in Central America? You have to understand that banks are so regulated because of anti-money laundering and KYC protocols that they ask for a pamphlet of about 20 pages for you to fill out to open a bank account for the most part. And when you consider that the majority of our people are also uneducated and illiterate, how can you expect somebody to fill out 20 pages of documentation to open a bank account? And it goes even further than that. They ask for things like proof of residence, right? And if you're, most people use a prepaid phone, so they don't get a bill to their home, so they can't use that as a proof of address. Most people that live in rural areas of Central America live all together, so they don't have electric bill, either because they're connected to the grid illegally or because it's a huge family sharing one electric bill, so that their electric bill doesn't serve for proof of address. And I could go on with more examples as to how people are systematically excluded from the financial, or from the banking system rather, not the financial system. And so that's one part, right? There's high regulations that exclude people from opening a bank account. And then you have our people that, for the vast majority, use cash. And when you're trying to mix tech with financial inclusion, I don't think, or I haven't seen at least, many companies really focus on the cash aspect. If you consider that 70% roughly of people in Central America and broader LATAM are exclusively cash-based, you need to create cash-in avenues and then cash-out avenues that are convenient and cheap for people to wean off cash. I think it's kind of ridiculous that in year 2022, people are still having to travel. And as Alejandra said, they have to buy 2 bus tickets on average to go and get their remittance. And first of all, the effect that has on our economies is crazy, because people aren't being as productive because they're having to spend too much time moving around to be financially included. But if you want to create a digital economy, you need to wean off cash. And the only way that I see that can be done is by creating cash-in avenues to digitalize this money. Because otherwise, people are we're going to keep this strict line of the people that are cash-based and the people that are, digital. And so yeah, now whether banks can compete with fintechs or not, I think it's going to be tricky, and I think it'll be mainly up to the regulators. Again, with banks being so highly regulated in our countries, it makes it really hard to provide financial inclusion when you have to ask for 20 pages of documentation, right? And whether they'll be able to compete with other fintechs, I'm not sure yet. I don't see that banks are keeping up with the latest trends. I think they are still very much in a box. And I'm not sure that remittance recipients want to deal with banks, mainly because they're not keeping up with the trends. Having a bank account means that you need to have a minimum balance. When you receive a remittance in cash, although obviously it's not as safe because you can be mugged on your way home and all of the implications that it has to receive a remittance in cash, you don't have to keep a minimum amount in your account, right? Because you don't have a bank account. But the moment you open a bank account, you have to stick to all these rules that banks have on how you use your money that most people don't actually like. The non-banked don't like, and the banked, well, they don't really have another option, so they have to stick to the bank's rules. So I think it's going to be interesting to see how this evolves. I definitely see there's going to be a shift in less people wanting to be banked, especially with new technology like crypto that allows you to be the owner of your funds and not need intermediaries. Again, I think throughout the process, as we wean people off cash, we will still rely on intermediaries, especially these avenues for cash in and cash outs that help people wean off of cash. But otherwise, I do think that in the long run, we will see less protagonism of the banks and more protagonism of self-custody money in terms of people holding it in their phones, just like, you know, we do with WhatsApp messages. No one's sending handwritten letters anymore. We're all sending WhatsApp and Facebook messages to our family members abroad. So I think in the next 10 to 15 years, we'll see that happen. And just the last point I want to mention, now, today, about 150 million people have access to Bitcoin. And if we compare that to the internet and to internet adoption, that's the same amount of people that had access to the internet in 1997, except Bitcoin and crypto adoption is being adopted a lot rapidly. So just consider how things have changed between 1997 and now. And I think things are going to change even quicker and more drastically in the financial sector between now and the next 15 years in terms of financial inclusion and financial sovereignty.
Well, lots to discuss in there. Quite provocative. I'm sure Liliana would like to offer some responses to it, maybe Maria Alejandra. I do think the point you're making about, financial inclusion strategies that are actually counterintuitive. Our experience working on financial inclusion effort with banking financial institutions has been extraordinary, fascinating with some of the issues that we encounter, like a banking in a country X in Central America that says that you need to provide a written typed letter of recommendation, of reference to open a bank account, and another bank who asks you to give a fixed phone line to confirm your KYC condition. So
I don't even have a fixed phone line in my house, No one uses fixed phone lines.
I don't think even in a country like Guatemala, I don't think right now you have more than 500,000 fixed lines. A country of 17 million people, but 14 million phone users, mobile phone users. So in any case, some interesting issues to discuss. Of course, you say it's a matter of time, but of course, time is an abstract thing sometimes, but it's also very concrete because it's measured by seconds and by certain realities. And I'm just curious as to when will this really happen and how it will happen, because I see the extent of still financial access outside of the banking system being practically non-existent. So I'll go back to you with that question. We have a couple of questions from the audience. Some are as provocative as this one. But one of the questions that are asked is that there are statistics in Mexico that belie the impression that all money flows from migrants to the US to Mexico are legitimate remittances. How can we be sure that a portion of these flows are illicit transfers or money launderers or criminal activities? I don't know if anyone wants to answer that question, maybe Liliana. Yesterday, we had a discussion about the issue of extortion and how migrants need to send money sometimes through a remittance company to pay the extortion ring. Is it possible to determine that a transaction can be suspicious and related and tagged as related to extortion? Other question that we have relates to Cuba. I don't know if anyone is interested to answer this question. It's a difficult question to answer, but it's basically, is there a human right to send and receive remittances? Is it acceptable when they are restricted or blocked for political reasons? This is practically in reference to the Cuban case, where there are severe restrictions on sending money to Cuba. Another question is about how can we overcome the challenge of countries that prevent their citizens from getting identifications, thus the ability to have a bank account or receive remittances? We see this in countries happening like in Nicaragua, where there is a dictatorship that we hold the issuing of IDs to prevent citizens from voting. A question perhaps for Lily too, considering the two channels that remittances can be sent by digital and retail, can you expand on the volume of remittances between 2019 and
21.
2021?
Volume of remittances in 19, 20, 21, he's thrown to me.
So, and finally, perhaps for Piero, my question is, how can we measure the amount of remittances being sent via crypto? We understand Chivo Wallet, for example, has transferred about $70 million so far through Chivo Wallet in a country that receives $7 billion practically. So, is there a way, are governments trying to measure this inflow? So I'm going to leave the floor open. Perhaps Liliana, you want to take on any of the questions, then Maria Alejandra and Piero, in that order. Thank you.
Yes, Manuel, with respect to what was the first question concerning the flows being illegal or whatever, I think the main point here is that the money transfer industry is a highly regulated industry, right? It's regulated at the state level, it's regulated at the federal level in the US, it's regulated, and the banks are extremely careful, right, with respect to the nature of flows, right? So all serious companies in the industry have very sophisticated AML programs and programs to prevent the misuse of their channels by bad actors. Of course, it's difficult to detect extortion as a purpose of a send, right? So if it's in normal amount patterns, then it's very difficult to detect that. If it's something outside of normal amount patterns, then, it can be detected and blocked. But overall, the point is that as far as the industry is concerned, there are robust programs to prevent the misuse of the channels, the sending channels. Did you want me to answer more questions? Go ahead and answer another one, or give somebody else a chance to answer that one. Well, with respect to that Cuba question, yes, it is a question that matters to me. I'm Cuban American, so it definitely matters to me. Look, I think it's honestly a question, the effectiveness or the morality of human sanctions, not just that type, but any type, is a complex discussion, that goes beyond the format of what we've got here. But certainly it's something worth, a whole, meeting on its own and much more beyond that. So that's what I would say on that. Yeah, so that's it. I'll give somebody else a chance now.
Thank you. Maria Alejandra, Piero, any comments on the other questions? Identification, that's been an issue like Venezuelans in Colombia, right?
Yeah, actually, right now we are working really hard and really strong with the government, because the Venezuela people that are staying here in Colombia, they need the remittances. And as Liliana said, we are highly regulated, but we've been working really hard to identify these people and to give them access to our financial products with no need to have a balance in their account or to having a fee to access to their mobile wallets because they're financial inclusion products. So I think that the restrictions that they had right now, we've been trying to overcome them. Not only in the financial matter, but also in the know your customer aspect. I think that when you have the purpose to include people, you find a way to do it. Also, regarding the cryptos, I'm sure that, as Piero said, cryptos will change the way we have the business right now. I think the major goal that we have is how to make it affordable for low-income people. Right now, it requires a lot of expertise of the people to have access to it, and sometimes there's some people are afraid to lose their money that they've been working so hard and their families need it so hard to for their day-to-day basis. So as soon as we can have those cryptos affordable for low-income people, we are sure that this business will change. As you mentioned, Manuel, the big question is when. When can we do that? When will that happen? Meanwhile, we try to make it easier for the beneficiaries to claim their money, even with the regular money aspects, or with cryptos, or with the traditional accounts, or with their mobile accounts, trying to make it easier, affordable, and having a cost reduction also for them to have it and make it more valuable, the service for them.
Thank you. Piero.
Thank you. So a loaded question. I want to start first. I was reading some of the Q&A here, and I want to start first addressing how we can measure crypto remittances. And I mean, I don't think right now that I know of, there isn't a measure of crypto being sent, from the States to Latin America that could be qualified as a remittance. I think that in order to do that, you need to have an intermediary. And it's kind of counterintuitive because the whole approach of crypto is that you don't need an intermediary. But as I mentioned earlier, because 70% roughly of our population is unbanked, and we still need to give cash to people, and people still need cash, crypto remittances will require an intermediary. Let's call it an exchange, right? A platform where you can upload your crypto, send it on the exchange, and then the person receiving it will have the ability to convert it back to cash. I don't see a difference between somebody walking to a remittance company, giving cash, the remittance company sending the money, and somebody, in Guatemala, for example, going to the remittance agency and taking the cash out, versus somebody going with cash to a Bitcoin ATM, for example, in the United States, depositing the cash, sending the Bitcoin or the cash via the Bitcoin network, and then the recipient here receiving it in their mobile wallet and then cashing it out at the closest convenience store. The only thing that changes in my perspective is the rails through which the money moved, either the MoneyGram or Western Union rails or the Bitcoin rails. And although a lot of people are worried or because they're trying to understand it, and how this works, Maria Alejandra said it's still a technology that people don't feel super comfortable with. And I'm not sure that people need to understand it. I don't understand how remittance companies send money, and I don't care. I just know that if I go to a agency in the United States and I send money, my family member will receive it in Guatemala. I know that whenever I make a wire transfer, I just input the details of the recipient and the recipient will receive it. I don't need to understand how ACH or wire works. Just like I don't understand how the internet works or the engine in my car. I just know that if I press the button to turn my car on, it's going to turn on. So as I mentioned, right now, Bitcoin adoption is at the same levels of adoption that the internet was in 1997. And I don't know if you guys remember how complex it was to build a website in 1997 or to even buy a domain for a website in 1997. You needed to be a full-on software engineer to buy a domain in 1997. And today, you essentially can ask Siri, hey, buy pierocohen.com.gt, and pretty much she'll buy it for you, or at least redirect you to the webpage where with 2 clicks you can buy it. So in terms of time, again, this technology is being adopted a lot quicker. I think the changes we've seen in the world, the drastic changes we've seen in the world, when we compare internet adoption, in the last 20 years versus now, or in the last 30 years versus now, I think the financial inclusivity through crypto adoption will change the world in ways we don't even understand yet. But in the meantime, we will need to rely on intermediaries to help measure, what, if it's a remittance or not, and where it's coming from, and to who it's going to. And also these intermediaries will be key to help people adopt this technology, right? Because right now the technology as it stands, it's very complex. And just like we now need GoDaddy or Google domains to buy a domain, this is the equivalent of that intermediary that didn't exist 30 years ago when people needed to create a new domain. So again, I think it's gradual, but I think people are expecting it for it to take a long time. And if the internet has shown us anything, is that everything is exponential when it comes to internet adoption. Even though 70% of the population is unbanked, in Guatemala, about 91% of people have access to a smartphone. And most people have a Facebook account and an Instagram account. So, and they don't understand how it works. They just know that it works. So I think we're very fixated on having people understand how Bitcoin and crypto works without really understanding that once people try it and it works for them and they can cash it in or cash it out, adoption is really going to increase substantially.
Thank you. We have just a few minutes left, and I wanted to allow you to, if you could, in 1 minute, give your concluding remarks. I will say, Piero, however, that there is more than Rails to the transaction element. There is an important aspect of regulatory compliance that has to do with the public good and the national interest. And those things you cannot do away with. And it's something
but if you have an intermediary, you can follow all KYC and AML protocols. We do that with
will allow
Osmo.
you to then determine the transactions, the volumes that are coming through that.
Then yes,
indeed.
through the intermediary, right? But just like with cash, if I have a friend going from Miami to Guatemala and I send $250 to a friend with cash, through the friend with cash because he's traveling, there's a lot of money
the
moves
ledger
with
has
cash.
to be compliant, basically.
And exactly. And with cash, we don't know how much money in physical cash moves between the United States and Latin America. So it'll be a mix.
Thanks. Liliana?
Manuel, yeah, if I may, in addition to your point on AML and Piero's comment that you can't measure it today, you can't measure. If you can't measure it, you can't control it for AML purposes, and that's an important point. The other difference between crypto and other methods is that we are obligated to commit to an exchange rate at the time of the transaction, right? The CFPB requires it. So I think that's an important distinction to make as well.
Which can happen instantaneously in real time because the transaction takes less than a second. So the FX doesn't really change.
Not really.
Maria Alejandra?
Oh, well, finally, our conclusion is we are really committed to financial inclusion. We just see the remittances going through bank deposit as a way to have a financial inclusion. And when I mention bank deposits, it could mean also mobile wallets, different strategies to make people easier their lives, to having instant access to their money, to avoid different costs, and to give them more security, or at least that different tools to have the control of their money, not only for the day-to-day basis, but for the savings purpose and other purposes that they have in life. We want to make remittances productive, and we are committed to do it that with our allies, the remittance companies, and also with the government in Colombia. And I think that those alliances are fundamental for not only the business as we know it right now, but for the future of the business and the well-being of the people.
Thank you very much. We are at the end of our panel, and I wanted to thank you all for participating and exchanging your views. Definitely, at least we have some insights as to whether this growth will likely to continue. It seems that will be the case, and perhaps driven by what Lily mentioned, the fundamentals of economic necessity, driven by the home countries' realities. In fact, the average amount that a migrant remits is not homogeneous. A Brazilian immigrant sends $600, and Nicaraguan sends $250, and a Guatemalan sends $300, and that relates to the cost of living. What's making things more complex, perhaps, are the factors that lead people to live, but also that now we have varying vehicles of sending money, and these vehicles seems to be in a flux, and perhaps a transition. The continuity of cash with the use of digital transfers seamlessly, but also with a sort of depth of dynamics relating to new transaction vehicles, such as this cryptocurrency. So all connected to some extent to conventional realities, such as regulation, and others to demand-driven realities that we are dealing with in the digital economy. So we'll keep you in touch. We hope to give you more update developments on how the industry is evolving, as well as where the remittance trends are taking place this year. And we thank you very much, and thank you our participants and our colleagues that help us organize the event, to Matthew Martin to help us set up the event and have this conversation. And have a good day.
Thank you, Manuel, for having us.
Thank you. Bye.